Hey, so this is all about the economy today. It's been bittersweet news. The first week of January in 2016, the stock market's already down over 5%. It's bear market, and I imagine at this point, being we did have some pretty good economy and economic numbers come out in December in the way of jobs, where the jobs number of people hired surpassed their expectations by um, almost 100,000. So we ended up adding almost 300,000 workers. They were expecting 200,000. Good news, right? Well, look at the big picture. So ultimately, the reason that the stock market's falling in, um, it's kind of hyperinflated by China, but it's deeper than that. It's happening here. So retail sales here in America have dropped the most since before the last recession, which was not very long ago, um, almost a decade ago now, but not quite. U.S. factory orders have dropped, so the most since the collapse of the Lehman Brothers, almost a decade ago. Real U.S. GDP growth has begun to decline, and in the last quarter it was negative. Negative. So you're spending money, not making money. As a country, that's not a good place to be for the economy. So overall, you're exporting your country. Um, the U.S. export growth has been declining, or it's been weakening rather. It's just because the dollar has become so strong, so our products are more expensive, straight up. So good news for the dollar, we're one of the more stable currencies there is, but because of that, everybody jumping out of China, investing in US dollars, because they're afraid that their money's going to be devalued again, or like Brazil, Russia, Europe, where their currency is falling off the chain. US is a stable economy in this. So it's even better news on that front because people are actually putting their money into the US banking. So, or bonds, which is banking. So it helps us in some ways, um, but it also kind of overinflates things. And so our products are more expensive, which in the end could be a really bad thing. We're not able to sell anything. Yeah, our GDP is going to suffer. Corporate profits have begun to decline. So, you think that's good news for your paycheck? Probably not. Um, CEOs obviously don't want to have to cut any of their money, right? So, good luck. Ultimately, I think 2016 will be disastrous for the stock market. In the short term, I do see it going up to 20,000. So if you want to be slightly risky with your investment, you can hop in, hope that it goes up to 20,000 on some of the good news that we do have, like the jobs report. But don't forget the big picture. So it's not just everybody's economy. Our economy also has a lot of holes in it right now. And so I see that number tanking, even below 16, below 15, down to the 10 to 12 range before it finally stabilizes. And that's if we don't run into another big bubble. I just can't see it being tech, unless those companies have overinvested themselves in trying to push products like Apple, their stocks declining. But ultimately, people love technology; they're buying it. So I think it's going to be student loans, maybe housing again, corporate loans. So oil companies, Chesapeake, Sandridge, BP, Exxon, all those companies are going to have trouble. The bigger ones will probably weather the storm just fine, and all that money that they raped from the economy while things were good in their eyes. But I see big. It's kind of doom and gloom. So if you want to keep your money in and ride it out, good luck. You'll probably lose a lot. Hopefully, it doesn't take a decade to recover. Depends on when you're wanting to retire or like what your long-term plans are. But for me, I'm hopping out. I'm staying out for now, letting it fall, not losing any money when it does fall because I'm not in stocks. And then once it gets down to where I think it'll start to return, I'll buy in. May fall a little bit more, may start to rise, but that's fine because the rise will ultimately be better. It's just a matter of getting the companies in the right mindset. So, as you guys know, I'm a Bernie Sanders supporter, and honestly, I think that if he does become president, that our stock market will ultimately, towards the end of his term, get a lot stronger. But it will be weaker in the short term regardless. If Sanders or Clinton or Trump, really Trump, anyways. So anyways, that's Chase Rants and Raves. Comment below, subscribe. Let me know if there's anything that you want to see, anything that you want me to talk about. Just keeping up with the news articles day to day. I'll fill in on the next one I see. Till next time.